Hello and welcome, everyone. Welcome back to SCG Week. I hope you all have been enjoying this incredible program that we put together this week. And tonight, we are so excited to have you back for our panel on gender lens investing, investing in women. All right. Well, like I said, we have a really wonderful panel tonight, and I'm so excited to introduce our two speakers. First off, we have Xuyin Tang. She has almost a decade of experience investing and working in emerging Asia. Based in Vietnam since 2013, Xuyin has witnessed firsthand the rise of Vietnam's entrepreneurial ecosystem. And as a partner at Patamar Capital, Xuyin spearheads the gender lens investing efforts, including managing one of the first gender lens investing funds in Southeast Asia, the Investing in Women Fund. She also founded Beacon Fund in 2019, which is one of the first funds focusing on providing financing for SMEs specifically backed by women. Xuyin was named one of Australia's 100 Women of Influence by the Australian Financial Review in 2015, and an Asian 21 Young Leader by the Asia Society in 2016. She currently serves on the Southeast Asia Advisory Council of Women's World Banking, a global NGO promoting women's financial inclusion. She's a graduate summa cum laude from the Australian National University, where she was also awarded the University Medal. Her counterpart tonight will be Virginia Tan. Virginia Tan is the founding partner of Teja Ventures, the first gender lens venture capital fund for emerging Asia, targeting early stage technology companies for the She economy. She also founded She Loves Tech, the world's largest startup competition for women and technology. Virginia is the founder of Lean in China, a women's platform with over 100,000 members across 25 cities and 100 universities in China, which supports the goals and aspirations of Chinese women. Virginia has been widely recognized for her tireless efforts to empower women worldwide and has been named to the Peak's inaugural Power List, Rockefeller Foundation's Next Gen Leaders for Gender Equality, Singapore's Top 100 Women in Tech, Fast Company's China's 100 Most Innovative People in Business, and prestigious 40 Under 40 in Singapore, among many others. Tonight, we are so excited to have a discussion between both Virginia and Xuyin. Now, a few more logistical items I'll mention before we start a discussion tonight. First off is that we'll be offering a feedback survey, so we'd love to get your feedback. As well, if you're interested in posting, please tag Hoffman Global Institute as you go about posting or commenting on any of these items. And again, we'll have a Q&A box down below, so please submit your questions for us there. So, without further ado, I'd like to welcome both of our panelists into the panel. Please join us. Thank you so much for being here tonight. We are so honored. Again, this SDG week, we've really put so much effort into bringing speakers like you to share with our students, to share with all of our stakeholders across the spectrum. And I'm so grateful to have you here tonight. Now, investing in women can entail many different goals, whether this is investing in firms that are led by women, investing in companies and products that improve the lives of women, advancing companies that are committed to achieving gender equality, and many other amazing objectives. So just start us off here. Please tell us, how do you find your mission, both as a company and as an individual in this space?
Sure, happy to take that first. And firstly, thanks Andrew and the INSEAD team. It's a real pleasure to be here. In terms of our mission, it's a great question, right? A lot of things, or everything really starts with that. I think at a first glance, our mission at the Beacon Fund, our flagship gender lens investing product, might seem like the goal is to simply kind of get capital to more female entrepreneurs. And that's certainly an important part of who we are and what we do. But I think beyond that, our mission really stretches to demonstrating alternative models of success in entrepreneurship and investing. And I guess, what do I mean by that? So I think one of the things that we've seen, and I think been talking about increasingly, is that there's this mono narrative of what successful entrepreneurship and investment looks like, right? It means, becoming a unicorn, right? It means a VC style of investing, I think really focused on exponential growth companies. And it's interesting because I heard that I think Professor Rebecca Henderson also came to this conference, and I think talked about reimagining capitalism, right? And I think part of what we would like to do or aspiring to do at Beacon is also reimagining what investment can look like. I think VC is a great model for some types of businesses, but from our perspective at Beacon, we're also excited about demonstrating or developing and demonstrating the success of other alternative models, right? And I'm sure I'll come back to that later in this panel, which might not be like traditional VC, right? It could be around debt financing, around mezzanine financing, rev share, different ways of, I think still, of course, having some financial goals in mind, right? But being a more flexible type of capital to support a business's growth. I think personally, in terms of my mission, I think one thing that I've always I grappled with, I think, is the issue of inequality, right? And I think whether that's gender inequality, whether it's economic inequality, I think these are the issues that I really, I personally am very motivated to tackle, and yeah, hope to do so through my career as well as through my personal activities as well.
Thanks, Shuyan. Thanks, Andrew. Maybe I'd like to share a little bit more about, why we started Teja and how I really see sort of gender lens investing. I started Teja when I was particularly inspired by the growth of She Loves Tech, which is a nonprofit startup competition for women in technology, now the largest in the world. We're in 50 countries this year. And I think this began in my little shitty apartment in Beijing, in 2015, where we were just doing an event, and every year the competition doubled and tripled in size. And I think I was inspired, to build Teja Ventures because I saw two things. I think I lived in China for 8 years prior to COVID-19, and I really saw the way the digital economy. The digital economy was really changing the way consumers, but in particular, women, were consuming. I was looking at the way their aspirations, their needs, and the consumption patterns were interacting with the rise of the internet economy. And so for me, the she economy or the female economy was always a big economic and commercial driver. That's actually the way I saw gender lens investing. And then the second thing out of She Loves Tech is I never expected She Loves Tech to be more than an event in one place, let alone in 50 countries. But I think what I started to see, were women all across the world building technology companies, platforms, products, and the potential, especially in emerging market countries, of technology to change the lives of people, but in particular women. So I remember in 2017 starting to see technology companies coming out from places like Pakistan, for example, Indonesia. I mean, more than 70% of She Loves Tech's entrepreneurs come from developing countries. And that's when I realized, the real potential of technology and digital economy to change the lives of all of us as consumers, but in particular women, and particularly in countries where women actually faced a lot of physical barriers to access, whether it was services, whether it was income, or whether it was, it was resources like credit. And so I think when I built Teja, I was single-minded that I wanted to build the business case for gender lens investing. I wanted to build a business case for the she economy because to me, it was clear as day. I saw the female economy or the she economy as the biggest arbitrage opportunity of our generation. And I could not understand why people couldn't see that. Like, to me, it was like this thing, like in my face, and I built Teja because I wanted to prove that business case very, very simply. What does gender lens investing mean to me? I mean, in Teja's first fund, which took me 3 years essentially to build and close, we have more than 70% female entrepreneurs, but we also invest in male entrepreneurs. But for me, gender lens investing was really looking at the role of women in the entire value chain of investment, looking at women not just as an entrepreneurs, or as part of the founding team, but really looking at women as consumers, as traffic, as a mobile workforce. And I felt that employing a gender lens, especially I look at a lot of consumer technology, and understanding the way, women were really driving consumption, and particularly new forms of consumption and digital consumption, I felt that any company which knew how to leverage the she economy would actually be more competitive and more successful than a company that which did not. But when I first started Teja, and I think I've been quite, I think, honest about this. I think I might have shared it with Shuyan before. Was that when we first started Teja, to a commercial investor, we were like too social because we were into gender, and to very traditional impact investors and development institutions, we were too commercial because we saw gender lens as a commercial driver and women as economic drivers. So literally, I felt like I was, here I was trying to prove a business case, but I was both too commercial and too social at the same time, and it left me nowhere. And I found that incredibly challenging. It was also incredibly rewarding, because I think up till then, even with the success that I had building, these large women's communities, right, both in China and with She Loves Tech, I don't think I truly understood the bias that women face, both as entrepreneurs, investors, and in the workplace, until I started building my own venture capital fund. And to see this bias in practice, not at first I took it personally. I thought I was like me, I'm not good enough, or, etc. And after a while, I started to realize the bias is really towards the thesis. And so, and that wouldn't necessarily change in one generation. And I realized that no matter how I sliced and diced it, the minute I put gender, into the mix, gender lens, gender smart, investing in women, that bias would set in. But the rewarding thing about the journey was the fact that being very explicit about the gender lens and why we built Teja also enabled me to find the investors who were the most aligned with us. And that's what you really need in the beginning. And though that process was very painful, very tiring, and at times, rejection, you learn to become a champion of rejection, I think. I wasn't so good at the beginning. I used to cry, cry all the time on the way home and stuff. But I think, I think it strengthens you, it strengthens your resolve. It reminds you why you're doing this in the first place. And it really enables you to find the right fit of investors. And obviously 3 years later, the landscape has changed, right? The thesis is not as nascent as it was, but I always remember those times. It was actually both humbling, but also a great education for me to understand the way the world really is, not necessarily the way you want the world to be.
Yeah, and I think that's so emblematic of the challenges that you're facing across the ecosystem, right? As you mentioned, it's not only the entrepreneurs who are facing these problems, it's also the investors. So sticking to the idea of the broader ecosystem, I'd actually like to turn this to Shuyan and tell us, what's the ecosystem like in South and Southeast Asia? These are the areas that Padamar and Beacon Fund in particular have focused on. So I was wondering, can you speak a little bit to these challenges? Are they similar to what Virginia has just mentioned? Is there something specific about this region which draws you here and also challenges you here?
Yeah, absolutely. I mean, I think, definitely agree with the points that Virginia was making. I mean, I think we've been investing in the region for the past 10 years. And I think, I think we were probably, too early. I think Virginia's saying how her Teja was a little too early in some ways, right, for LPs to stomach, right, on the gender lens front. And I think in some senses, I think we maybe were a little bit too early when we started, right, on trying to build a, impact-focused venture capital fund focused on Southeast Asia. Like, where's that? What's like? Can you name a well-known company which has come out of that region? I think the big, I think the rewarding part, I guess, for us has been really to see that, huge transformation that's taken place over the last 10 years, right? In particular, in the Southeast Asian startup investment, entrepreneurship ecosystem in general, right? I mean, I think, we all know the number of companies now that have become more household names, right? Whether it's, the Gojeks, the Bukalapaks, the Grabs of the world, Tokopedias, etc. I think, the other point, which to highlight, I think which Virginia also mentioned, was I think this the speed and the scale of digitalization, right? I think it's really been incredible across I think even in the last kind of like 2 to 3 years, right? I think COVID also was a big accelerant in that. I think the growth in digital financial services, right? In people, I think conducting all kinds of different, or engaging with different kinds of products and services online, right? It's really it's a huge step change, right? From even just say 2 to 3 years ago. I think the one thing that we've really learned about the Southeast Asia market is that it's really highly localized. I think we at Panama we have we have a team in Vietnam where I'm based. We have a team in Indonesia, a team in Manila, etc. People sometimes say, "Oh, ASEAN, it's the 600 million person market, right?" But I think that the reality when you come and when it hits the ground, and I think as our own companies, I will admit, have faced when trying to scale regionally, right? It's not always been the easiest. The easiest thing to do. Obviously, there's the language barrier, but I think deeper than that, right? I mean, I think the way that consumers interact with products, I think the legal regulatory frameworks, there's a lot to digest, right? I think and talent, right? I think it's maybe a huge issue, talent as well as you move into different markets. From a more gender-focused perspective, I think the one really encouraging thing that we see is that the rate of female entrepreneurship actually in the region is very high, right? The female consumer in the region plays a very huge role, as Virginia also mentioned. I think the challenge there is that has that translated into investments in companies kind of in those sectors? Not necessarily, right? And I think that's the battle, and that's an opportunity as well, right? That we're trying to capture now.
Yeah, I mean, Shuyin, I think absolutely right. Yesterday, my co-founders at She Loves Tech and I were looking for some stats for our upcoming conference for She Loves Tech, and there was a really good piece by Deal Street Asia this year, and I want to draw attention to Southeast Asia, right, versus the rest of the world, right? So, I think Deal Street Asia had two quite conflicting stats, right? One was that, companies with female co-founder, they managed to raise 16.5% of all venture capital. Okay, so I think in Southeast Asia, having more diverse teams, so like for example, I could say companies with at least one female co-founder took up still quite a large share of deals, for example. However, when that number came to capital raised by just sole female founders, I don't know if you guys want to guess. I mean, the number is literally horrific. The amounts raised by sole female founders in Southeast Asia was 0.9%, not even 8%. So globally, or I think in the US is 2 point something. I think this year is 3+%. In Southeast Asia, for sole female founders, it's like 0.9%. So I think what I see as encouraging, similarly to what Shuyin said, is I definitely see the rate of not just female entrepreneurship, but female tech entrepreneurs increasing. I'm seeing it, and we're seeing a lot of new minted unicorns with at least one female co-founder. And so I think that's exciting, and I think the region has also seen a slew of new unicorns in the last 2 years, actually strangely accelerated by COVID, a lot in the fintech and super app space. I also see a lot more women entrepreneurs in certain verticals. So, we have like a great report on this on She Loves Tech, a lot of them in healthcare, in education, in areas linked to social impact, in wellness, and in food. I think there's a really great article about how women are really dominating the food tech space in Southeast Asia, raising some of the largest rounds. So, and that's a vertical that we ended up investing a lot in without necessarily planning to. And so I think those things are actually pretty exciting. I think what I've seen really with She Loves Tech over the last couple of years, right, is that I think there's data backing this up, I think from some of the US universities, but when we look at women and entrepreneurship, I think 70% say their biggest challenge still is fundraising. The second thing that we see is that women are actually not, the majority of women entrepreneurs are not just motivated by financial incentives, but a huge part of their motivation of why they build a business in the first place is actually social impact. And I think prior to COVID-19, that was almost frowned upon. I've seen investors actually tell women to hide the SDGs from their deck. Now, this is like a real example. Please don't put the SDGs in your deck. You look less serious. I think COVID has changed that. I think there's a lot more capital which now wants to see which SDGs do you fulfill. And I think that is favoring women versus being penalized. The third thing, and I think, Shuin mentioned this before, and I salute what she's building at Beacon, right? Is that I'm Teja is a VC fund, whereas Beacon is essentially a private debt fund, right? What we're also realizing is that apart from, the overt discrimination, Me Too type incidents, I actually believe those are the minority versus the majority. What we're seeing in terms of majority of, let's say, discrimination or bias actually comes into two other parts, right? So leaving out the Me Too stuff. One is that, venture is very often a close network game. It's about who you know, and it's like a group of people. So if the deals are in the group of people, they get funded. If they're not in the group, then they don't get funded. This also applies to male entrepreneurs, but women are more likely to fall outside of the circle than men, women and minorities. So that's the first thing. And I think one of the things which motivates me so much as a VC is that I'm seeing companies, some of the companies with the best metrics not being funded, because opportunities are not being evaluated equally, because of network asymmetry, and women are more likely to fall outside the circle than not, and so are less likely to get large amounts of funding, right? So I think that is something which motivates me personally as an investor, to ensure these companies do get funding, because what I'm realizing is that if we're funding companies which are not the best based on who these people are, then, there are untapped opportunities, right? Great for young funds like ourselves. And then finally, and I think this is a sector that I think the Beacon is stepping into, right? Women are not necessarily building companies the way the VC industry expects them to build companies. So if the VC industry was really based on high growth, high risk, and also therefore high potential of return, but also high potential of failure, right? And a lot of women don't build businesses in that way. And I mean, and to be honest, a lot of men don't build businesses that way too. But VC is very set on a particular type of model. And like for example, I looked at a recent model. I shall not name the company, but it's a company doing FMCG retail tech in India, right? Not that many of them. And so, for example, to their revenue grew 20x in 2020, and their revenue was 130 million, but they spent 330 million to make $130 million revenue. And I can tell you hands down, a woman is not going to build a company like that. But yet that company has no trouble absorbing venture capital, right? And I see the same types of things happen in Indonesia, et cetera now. So I think as I'm building Teja, one of the questions I'm asking myself is not that, okay, hey, I'm going to, completely disrupt and upend venture capital as an industry, but what kind of fund am I building? As a woman, a VC, right? What kind of founders do I want to reward? How do I want to construct risk in my portfolio? Because I don't think my LPs necessarily want me to invest in all companies like that, right? Which is burn and burn, right? Because then what happens when the music stops? So I also think having more diversity on the investor level will also change the types of companies who are getting funding. Unfortunately, because of the predominance of that kind of risk and that kind of behavior, those companies are still going to be raising larger amounts. But I think, I feel like this is a lot of the asymmetry, which doesn't come across when people talk about, just the Me Too and the blatant discrimination. This is more subtle. This is about how an entire industry has been built historically based on a certain set of behaviors, and women actually don't behave that way. So the question for me is, how do I balance my portfolio construction to ensure, especially if I'm funding more women? Yeah.
Yeah, and I think actually one thing we want to talk about a little bit later will be the behavior of LPs and really what they're looking for. But one thing that you did mention, you alluded to Chuyin's strategy, which is a departure from the traditional VC model. So Chuyin, I was wondering if you could tell us a little bit more about Beacon's fund's specific focus on debt mezz strategies for SMEs that are already cash positive.
Yeah, I think Virginia's comments were a great segue into what we're doing at Beacon, because I think we were scratching our heads and asking ourselves a similar question, right? So, I think historically, actually, Padma has been a VC fund, right? And we still have, a number of funds focused on, I guess, VC strategies. I think one thing that we noticed, I think particularly starting in say 2017, 2018 or so, is as we were making a conscious intention to invest in more women-owned, women-led businesses, we looked at these businesses that we were reviewing and we asked ourselves, why are we passing on these companies, right? Looking at the ones that we had, rejected, and a good chunk of the time, the answer was, because they don't fit the growth profile of venture capital, right? I mean, I think as we're saying, VC, it's a home run business, right? I mean, you're looking for the one or two companies which can return the fund, right? Go 10x, 20x, whatever the case might be, and that's kind of the way the economics, right, of a VC fund really works. So it really precludes you from, in some ways, precludes you from investing in a more diverse set of businesses, right? Kind of by default. And that's what I mean. And then what we noticed was like, okay, maybe these businesses don't fit the growth profile, but they had a very interesting characteristic, which was that they were actually, profitable and cash flow positive. And as Virginia also mentioned, I mean, like, wow, that's not something we see every day in the VC world as well, right? Rather quite the opposite. So we thought about, like, how do we actually, so clearly these businesses are not just bad businesses, right? Sure, they may not be able to grow 100x, but they've obviously demonstrated strong product market fit. They're delivering something very valuable to their customers. And frankly, because they turn a profit, they're actually just great businesses from an economic perspective as well. And then as we got talking to more of these companies, we realized that, these businesses definitely kind of struggle to raise capital because they fell into this, we often talk about maybe the missing middle, right, in impact investing. And I do feel these companies are really the missing middle, right? So they don't fit this growth profile of venture capital. Maybe they're a bit more like private equity style companies, but they're too small for most private equity funds. The traditional kind of banking system in Southeast Asia is not particularly well developed, right? And focuses very much on personal collateral, right, to take out a loan. And so often these businesses were not able to access traditional capital from, say, banks. And, and then basically the founders were maxed out as far as they could fund it in terms of their own kind of, savings, friends and family, et cetera, et cetera. So we set about to craft a solution for these businesses and actually kind of more debt and mezzanine types of strategies did seem more appropriate, right? So why debt? Why mezzanine? So because these businesses are cash flow positive, they can actually support debt, right? And another thing that was a common theme was these entrepreneurs may not necessarily be that focused on an exit, right? And that's, as a VC, that's like the last thing you want to hear. But if you switch your mindset a little bit, maybe it's okay, right? If you're a debt investor, and you can also introduce different kinds of upside or kickers, right, in different ways, right, through structuring. Those can still be very interesting investments, and in many ways less risky, right? Because these companies are actually making money from the get-go. So that's kind of how we came about, or we came up with a thesis of the Beacon Fund. I think it was interesting, kind of the meeting of two paths, right? I think one, looking at gender lens investing, right, and a lot of kind of female entrepreneurs pursuing kind of more this model, right, rather than the traditional kind of tech VC growth model. And then the other part was, I think really understanding that, hey, in our markets, actually SMEs rather than startups are actually the most common type of company there are, right? So how do we really try and craft financing solutions which work for them? And I think to our surprise, it was actually quite a wide open space. There's not too many private debt funds in the region. Most of them are focused on, say, lending to fintech companies or maybe more kind of pure venture debt type of funds, which are quite different again. So it was quite an interesting opportunity to capture. Maybe to be clear, and again, we don't want to trash the VC model. And we also continue doing it, right? But I think we just want to show that there's different pathways out there, right? And we want to help entrepreneurs who want to build a different type of business achieve their goals.
And I'm curious to hear then, how have LPs and potential LPs reacted to this investment thesis? Is it something that's wildly popular, that's flying off the shelves like other SDG related theses, or are we still facing a lot of challenges? Number one, because of the biases that Virginia mentioned, but also number two, because this is a non-traditional investment thesis.
Yeah. Yeah, fundraising, always a hot topic. I think definitely we asked ourselves that question, right, before we even launched the fund, right? Because we were like, oh my goodness, right? I mean, this is as far from, because I think in our previous funds, we're like, okay, we're already doing so many crazy things, right? We're investing in Southeast Asia, it's an impact fund, we are gender lens investors, right? I mean, that could be too much for LPs to really take in. And like now we're also, now we're investing, it's debt, mezz debt fund, it's SME focused. Again, Southeast Asia region, many people aren't super familiar with. And we're also an open-ended fund, right? Just to add an extra piece of complexity into the whole picture. Yet I think we were pleasantly surprised. I think as Virginia said earlier, I mean, it's so important to find the right LP base, right? And I think we were also very conscious with that in the way that we built our sort of LPs. I think they really understand what we're trying to do in terms of trying to create alternative, financing models, right, for these types of businesses, a different segment, and have a strong alignment on the GLI front as well. So I think we were very fortunate to have a set of anchor, LPs who came from our existing network of LPs at Panama more broadly, right? And then, I think also then we're able to capitalize on some of this growing momentum around GLI, right? And I think just, people genuinely looking for new models and holistic approaches to GLI globally.
Yeah. Great question on the LP stuff. I wanted to address this because I've noticed our LP mix has changed. So that's actually something quite interesting. So in the early days, the LPs who funded Teja were really intentional. They'll be like, I want to fund gender lens investing, that kind. And the early investors were mostly women, wealthy women, women from family offices, and they loved the thesis, and they knew what the she economy was. Or they really believed and were interested in gender lens investing, and they believed in our thesis, and they loved our ecosystem. And then I think something began to change. I think a lot of the early bets that we took in pre-COVID were in verticals like social commerce, like mental health, like food tech before food tech became hot. and then slowly we noticed a different type of LP emerging, which is slightly more commercial. Right, we were funded a lot by Asian family offices in our first fund, a majority, and also high net worth individuals, and that was something I was not expecting. I was expecting people who were sort of more focused on the impact, and then this whole new class of LP sort of emerged, which were really Asian family offices liking venture, but most importantly liking the deals actually, and for them. For some families, the gender was something they were passionate about. And I don't mean just women, they were men too. Father and son pairs, they were passionate about it. They were like, they believed it, they want to put some money there. For others, they just thought it was a good deal. They thought that it made commercial sense, that, and so they wanted to put their money in there. So what I found very interesting is that when I first started talking about gender lens investing, people looked at me, especially institutions, like I was crazy. It was so nascent. They were like, what is this? What is the she economy? I've never heard of this. The Chinese were a little bit more advanced because the she economy actually is like a Chinese term, 他经济, right? So I think that they got it. Men and women, they both got it in China. Anybody outside of China, they were like, what is this? And I think COVID actually both accelerated and also many ways proved our thesis. A lot of the verticals we were taking positions in make perfect sense to people. And I think they started to understand, okay, you know what, the she economy plus the digital economy, women as economic drivers. And in Southeast Asia, that's a very real thing. Women have always been economic drivers in Southeast Asia, in the SME space, as consumers, East Asia in particular, Southeast Asia. And digitalization and digital economy has only accelerated that. Leading to the growth of certain types of technology companies. So I think something which is really, really interesting as well, I think this is a progression for myself as a GP, is that I think when I first started, I saw everything through a gender lens only. So my world was just like any entry point to anything was just a gender lens. I think now I'm also learning to balance out, right? So for example, applying a gender lens, okay, where does that lead you to? What kind of vertical does it lead you to? What kind of founder does it lead you to? But at the same time, what is that impact, right? It's almost like the gender lens is almost like a way in when you apply it. it's part of your criteria, but actually what comes out is actually more than just gender, right? There can be all kinds of the other SDGs. And I wasn't measuring that in the early days because, I hadn't set up Teja as an impact fund per se. And now I'm starting to realize actually, I feel our thesis has always been this, right? It's women as economic drivers and and market makers. But at the same time, what happens when you really truly empower women as economic drivers and market makers? Our thesis is that then they are also conduits for new patterns of consumption behavior and also conduits of social good. And it took me a while, I think, to just not to like, I was in my own little glass house of gender, my fishbowl, swimming around, what I mean? And I think now I'm starting to realize, hey, these are gender considerations, but these gender considerations can make us both commercially more successful and socially more impactful. And I think it's telling that story better, and myself not being so single-minded in everything, which I think has made me a better GP and also has helped LPs understand that story. Yeah, because the one thing I realize is that you're never going to overcome bias, not in a generation. The elephant in the room still is that, and I think that's changing. Thank goodness, because of the work of a lot of funds, right? But I think a lot of the narrative for conventional investors is that GLI is just for social good. Investing women is good. Investing women is charitable. I hate that word, but it's true. And let's do some good. So let's, sprinkle a little bit of money there, but not serious money. And I think that's why it's so important to show that these commercial models, they work. You're gonna make money, so that I think it's really, really important. I actually stress this a lot. We need to see women as economic drivers, not just social agents. Yeah.
And earlier, you spoke a little about how the she economy thesis led you to these specific verticals. But I'm curious now, you faced these challenges with your first fund. You found success in these different verticals. Now with your second fund, what are you thinking about? Are you pushing further into these verticals where you've had success? Are you developing new specialization? And this is a question for Xu Yin as well, is where does GLI private capital go from here?
We're in the midst of soft launching our second fund, and it's been a massively different experience from the first one. I struggled for a long time, and it is not a secret, right? The second fund has been completely different. I think what we've learned is that we're deep diving into the verticals and which we were successful in the first fund. Looking at really focusing on food, on retail, on wellness. These are all literally the majority of the deals we did in the first fund, adding a couple of new verticals because of the way we see the digital economy changing. And actually, encouragingly being in a position to be able to attract a lot more mainstream capital, because mainstream capital is also changing. So this is the other thing, right? Private capital. So I'm based out of Singapore, which I think last year attracted more private, capital than I think the 10 years prior before. So in 1 year, the amount of private capital doubled in Singapore, because people coming to Singapore as a safe haven. And what we're realizing is that private capital, generally in Asia, which is super commercial marketplace, unlike Europe or the West, was just about money, right? Just making returns. But now we're really starting to see a whole new generation of Asian families. And they're telling me, and this is not women telling me, this is men and women telling me, we want to deploy our capital with more impact. I'm almost stunned every time I have a conversation like that, because I'm always expecting the other thing. And I think it's very, very encouraging, except that I think, integrating a gender lens for us will not change. We're integrating the same gender lens. However, I think, really deep diving on the things that you have strengths in, like the verticals you have strengths in, and which coincide with the market opportunities in the market that you are in. I think that helps you, create a better fund. At the end of the day, a fund is essentially a financial product, and it must suit the needs of the market, right? Both in terms of where the money is being deployed, but also who is actually giving you the money. So I think that's the way we are developing. But I think the nature of private capital is definitely changing. I mean, today's a public holiday in Singapore, right? But I had 2 LP meetings, and they look like pretty commercial to me. But then this fourth generation, right? Skyon, he literally spent half an hour talking to me about sustainability and sustainable investments. And I was a little bit shocked, I think. I was not expecting that. And then one of our companies in our first fund really focuses on refillable FMCG, right? With the data play. And he just couldn't stop. Like he just wanted to know everything about it. And I was impressed, I mean, I mean that our gender lens there was always very clear. But my point is that, the market is changing. And so funds like us, I think, may finally have our day.
Yeah, and absolutely. I think we also see this trend around, transfer of wealth to next gens, right? Transfer of wealth to women. I think also coming up as a theme, right, in the way that we think about fundraising. In terms of, say, GLI private capital in particular, I'd say it's definitely getting a lot more sophisticated, right? Which is good, because I think, these days, I think, gender has been a little bit of a bandwagon in some cases, right, that a lot of people are jumping on. But I do think that the LPs who are very serious about the issue, right, are quite sophisticated, right, when they look at the issue. I think they're looking at it pretty holistically, right? They're not just like, oh, how many female entrepreneurs did you invest in? Let's check this box, right? But they're looking at even the way that you build your own team, right? The fact that you actually have practices and policies around GLI, right? Rather than just like, oh, yeah, I don't have any bias. If I find a woman who's a good entrepreneur, I'll invest in her, right? That's not really what LPs are looking for in this space, right? And they're also looking for a good track record in terms of really walking the talk in this area. So I think, basically now, if you're a GLI fund, you really have to have a thesis, right, that goes beyond like, oh, yep, I'm just going to invest in some female entrepreneurs. There has to be target segment, right, target verticals. I mean, it's getting a little bit more specialized in some regard, right? I think for us, we also focus on particular verticals, similar actually, education, healthcare, agri in our case. And very specific segment, right, with a very specific product. So I think, it's good to see, right? Because I think, again, it means that people aren't just viewing it as some kind of, social benefit or a thing, but there really has to be a strategy around it, right? And I think maybe that's the big shift that we're seeing in the market, which is really encouraging.
And Chuyin, I'm just curious, from the, as the landscape becomes more crowded with GLI investors and GLI strategies, are you seeing LPs pushing you to refine your thesis? Are you seeing them challenging you to make a distinct positioning, I guess, amongst the field of GLI opportunities? And the reason I ask this is because recent research has shown that the number of GLI strategies has actually increased. I mean, almost 50% from 2019 to 2020. So just curious about your thoughts on the landscape and how it's evolving, and how you're changing your strategy to reflect that.
Yeah, I mean, I think definitely the growth in GLI funds is a great thing, right? We don't really see it as like, oh my gosh, more competition. Because I think it's still just a drop in the ocean, right? I think the capital towards these GLI funds, right, compared to the nature of the gap, right, that exists. I think for us, but of course, one must have its own competitive advantages, right? And I think for us, we've really emphasized our local focus, right? Really focusing in on a couple of markets in Southeast Asia, which we know kind of inside out. I think also a very specific segment, which we feel has been underserved. So the SME segment, I think, that's again something that we emphasize time and time again, right? It's like, hey, this is, not only is there the kind of gender gap, but then there's also the gap when it comes to serving, small and medium enterprises in these countries. And, I think definitely, whether this is more on the VC side or on, say, the debt side, there has been, I think, a lot of, push from the LP level for specialization from a sector perspective. I think it's not enough to be like, oh yeah, we're a sector agnostic Southeast Asia venture fund, anymore, right? I mean, I think they're looking really for teams with expertise in particular verticals. So those are some of the trends that we've seen.
Great. All right. So we have about 15 minutes left in the panel. So first of all, I want to thank you both so much for your insights. It's so fantastically valuable to have you here with us. So I think we can move to some questions now. They're starting to come in. The first one is from Isabel, and she's asking, you focus a lot on the dynamics in Southeast Asia, Shuyin, and Virginia and China. So how are the dynamics in this region different from other regions, specifically with regard to the GLI lens?
Shuyin, you want to take it, or I go first? So up to you.
Yeah, feel free to go first. Yeah.
Yeah, I mean, Teja invests predominantly in Southeast Asia, and also, some in China. We did some deals in India as well in the first fund, but it's really we do a lot of what we call China Southeast Asia arbitrage. I think there are actually quite a lot of similarities from a general lens perspective from China and Southeast Asia, just in terms of consumer behavior, in terms of the digital economy, the way the digital economy is going. So I would say women as consumers, as traffic, as a mobile workforce, I think there's a lot of similarities actually. Coming out of the East Asia, Southeast Asia sort of region. In South Asia, I think it's a little different in the sense that I would say Southeast Asia, China, actually, I can see almost a more commercial lens, whereas in some place like South Asia, that lens, I would say actually is probably more social. It's simply because, I mean, if you just look at female incomes in Southeast Asia and China versus, the increase in female incomes in a place like India, right? It's just very, very different. But I do think that the potential for impact is still huge in both regions. I feel like when Teja built its general lens thesis, right? I mean, it was quite different from what was out there in the market, because a lot of it was just real focus on female founders. And a lot of it was, I think, some of the things that I admired, coming out of the West was actually, having funds really just focus on social justice, women's rights, really deploying capital with, I mean, there are many gender lenses, but deploying capital, with I believe, a very pure kind of lens. Honestly, if I tried to do that in Asia, I would have raised no money. I mean, that's just I think that's just a the realism of this part of the world. People are just very, very pragmatic. But that's something I definitely admired. I think in terms of where the world can learn from China, is in East Asia and Southeast Asia, is probably looking at women as, in a commercial lens. Because I think that, at the end of the day, LPs are there to make money. Capital chases more capital. The more we can actually articulate, the commercial and the business case, the greater I believe the floodgates will open for GLI. And I think, I mean, that has been my biggest motivation for building Teja and for doing everything I can to make it successful, because I know that if we can prove the business case, gender lens investing unlocks how many X returns, then, in a way, right, it's a way for capital to actually, more capital to dare to come in, for people to actually allocate, to that, versus saying, you know what, I'll just donate. And I think that's powerful. The second thing, which I believe other regions can learn from Asia, and I mean, Teja only invests in technology-driven companies, right? Is that when you sort of coincide, the gender lens or the she economy together with the digital economy, that's where actually your commercial returns become a lot more, possible. Plus, on top of that, I think, technology, and impact to me are together. Using technology, you can scale impact in ways that you couldn't done, without. I mean, we did a deal in India, and we did it with TPG Rise. And when I first met she today, she just got named one of Fortune India's 100 most powerful women in business. We're very, very proud. It's a company called Frontier Markets. It was one of the earliest investments we did, risky at the time. I mean, when I met her, basically, she was completely offline. She had an army of literally rural social commerce agents. They're all women, all from, villages. And I invested, I worked with her to build a tech. And I basically helped her pivot to do two things: arm each rural social agent with a smartphone, and she completely changed the product basket of the company, right? They were selling just energy products, and now they're selling everything from cattle feed, pharmaceuticals, digital, products, digital mobile products, FMCG, white goods, etc. And that has made her into a real platform. So I think the power of the digital economy, can transform the general lens in ways, I think, and make it, I think, a lot more attractive to investors. I think one, and I think simply, the obviously Asia in terms of growth is on a very different trajectory, versus sort of, other regions. And because I think in China, you have the fact that female incomes are rising faster than male incomes. In Southeast Asia, you have the benefit of a young population, right? A young population, increasingly sort of, driving digital consumption. So it's like, in a way, it's like a perfect storm of, I would say, rise of she economies, rising incomes, demographic dividend, and showing how again GLI can be economic driver, right? So I think that's what I would say other regions can learn, and because I think it's going to be a while till Asian investors are going to be funding things like women's social justice and women's rights that's seen as more a charitable sort of endeavor.
Yeah, I think maybe just to share from a bit of a a different perspective. I mean, I think one of the things that I think I found really striking when I first came to the region is that I think people are like, oh, but gender equality isn't really an issue, right? In these countries, right? So in Vietnam, there's actually very high workforce participation. For women, it's over 70%, right? Or Philippines, one of the top 10%. Oh, sorry, in the top 10 kind of most gender equal countries in the world, right? So there's statistics like this. So actually, when I approached investing in the first place, I actually didn't come at it with a gender lens mindset at all, right? It was actually something that I discovered over time. And I think what I discovered was that there was a kind of a quite striking gap, right, or disconnect between some of these statistics. I think what we were seeing in entrepreneurship, right, and particularly tech entrepreneurship, it's changing now, right? But I think so. For example, in Vietnam, yes, while women do participate, in the workforce at extremely high levels, right, one of the highest in the world, there's still huge gaps, right, in women, becoming entrepreneurs, right, particularly becoming tech entrepreneurs, and then taking on kind of C-suite founder types of positions in these companies. Similar story, I think, or same but different in the Philippines, right, where I think women have a very prominent role in many corporates, right. You would see them as in the C-suites of the large conglomerates, right. But then when it comes to tech entrepreneurship again, there was a huge gap. So I think that was for me maybe one of the, I guess, misperceptions that I had, right, when I first came to the region, and didn't actually think that gender was a very important issue to work on. I think now see it as a tremendous opportunity that's that is maybe not so obvious on the surface, but is really there.
And to follow on that, I'm curious. So you've seen a lot of different ecosystems for female entrepreneurship around the region. As you mentioned, right, not every country is the same. And so one of our listeners was wondering if you could speak a little bit more about how do you develop a holistic investment ecosystem, right? It's not just providing the funds, but also providing the support. And Shunin, if we can start with you, and then we'll go back and finish with Virginia.
Yeah, I think it's a tough question, right? Obviously, and I really don't think that there's a silver bullet, right? So think of it in kind of a multifaceted or multi-pronged type of approach. I think changing the face of like who's doing the investing, I think is really important. So I think in terms of, I think it's a pretty well-known statistic, right? Only about 10% of, say, partners at venture capital firms or investment firms are women, right? So how do we change that? I think the good news is that I see so many more women at kind of the more entry level, right, and kind of mid-management type of levels of VC firms now, right? So I think that pipeline, so people can't say, oh, there's no pipeline or whatever, right? And I think people are increasingly looking at different pathways, right, to become a senior leader in an investment firm. So I think that is, I don't think it will shift overnight, right? That is definitely more like a generations type of work. But I think doing that work now, right, in terms of really being thoughtful about if you're an investment firm, right, who are you recruiting, right? And I think same goes at the LP level as well, right? I mean, I think because that's obviously where a lot of the capital allocation decisions get made. So I think that's a big one, and really encouraging, I think, different firms to be, thoughtful about their recruiting strategies. I think another big piece of work that we did as a firm, and it's good to see others do as well, is to really, try and have these kind of frank and sometimes slightly awkward and uncomfortable conversations about unconscious bias, right? And how it might seep into our investment process, and really engage, I think, the men at our firm. So I think we actually have still a majority of men at our investment firm, which, to me, I actually see as a good thing, right? Because it's, this is not a project that women are doing alone, right? And, I think really engaging our whole firm in these discussions. So, GLI is not just the women's the women's kind of project or activity, was really important as well, and really unpicking where bias can creep in, whether it's in the way that we develop our pipeline, right, the way that we're building our networks, how we're asking questions to entrepreneurs during due diligence, right? There's some really, practical things. There's great research done in this area as well, which I think have helped us, I wouldn't say remove the bias. I think that's kind of quite maybe impossible, but at least reduce some of the biases in our processes, in the way that we conduct our investment process. Over to you, Virginia. I'm sure you have many more thoughts on this.
No, I mean, obviously, my thoughts are actually in two ways, right? Obviously, with She Loves Tech, our nonprofit, which I run with two of my other co-founders. A lot of our work is all about building capacity, right? For female entrepreneurs, right? Even though Teja is investing in both male and female entrepreneurs, but on the She Loves Tech side, it's just mainly female entrepreneurs. So I think one is obviously, collecting, we've been collecting data for like the last 7 years, right, on female entrepreneurs, their needs. For a lot of our global winners, right? We have a lot of proprietary boot camps for them. It's really crafting curriculum around their needs. So for example, even sharing, teaching them a lot of negotiation techniques, terms, and even closing the gap with, the perception gap between investors and entrepreneurs. There's always a gap, men and women alike, but I've noticed that the gap sometimes can be even bigger for women. And so I think it's around the education piece and community piece, because women entrepreneurs, find they like having a community, right? So I think that's one piece, this ecosystem and capacity building piece. Now, the second piece, which I think probably should have said earlier, is that I'm starting to learn that gender lens investing is not just about who you invest in and what you invest in. It's about the way you invest. And I think what we're starting to realize, again, when I started Teja, I didn't really realize this. I mean, I just went straight into it. A lot of times, founders, right? I think it means two different things. I think a lot of times, like the female founders in our portfolio, need perhaps different approaches from the male founders. For example, more nurturing, more coaching, more support on the fundraising side, on the strategy side, pushing, even. Though I do that also with the men, but we're starting to notice that, especially on the fundraising side, sometimes women need more support. And how can you provide that? How can you create an environment of trust? We seek to do that with all of our entrepreneurs, but I think my personal soft spot is for ensuring that the female entrepreneurs, in our portfolio, are raising and making sure we support that. The second piece, I think, is really understanding what female consumers, users, traffic really want, as a fund, and being able to guide our portfolio companies, to achieve that, right? So, and that to me achieves both commercial and social aims. So, for example, we invested in a women's health startup recently, and I told them, building a period tracker is just not going to be good enough. You have to go deeper into what the real pain point of women, in terms of the women's health space is going to be, so on and so forth. And that is very active portfolio management. So I think what I'm trying to say is essentially, I think GLI is not just about who and what you invest in, but the way. And each firm is, I think, a good GLI firm will really develop its unique methodology, as what Teja is doing and trying to deep dive into. Yeah.
And we are so excited to continue watching where both of you go with these ideas and continue to expand the field of GLI and really the women that we're impacting at the end of the day. So I want to thank you both so much for joining us. This was a wonderful discussion, and you've hopefully brought a lot of knowledge to our audience. Now, last but not least, I want to thank Virginia. She, on behalf of She Loves Tech, they are offering 100 free tickets to INSEAD students to attend this year's program, which takes place in December. We'll share that information later on as well. We'll send out an email to all attendees. Now, in terms of the rest of SDG Week, we also have a fantastic couple more panels coming up. Just wanted to point these out to you. We would love for you to join us for the future of Afghan women's education, as well as Primitive Art, the Sahara Human Adaptability in Climate Change, put on by H. Gibbs. Thank you all for joining tonight, and to our panelists, thank you so much. We really appreciate your time.